freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, what's up?
Hey, Dustin. Happy to be here. Talk about some craziness in the tax world today.
Yeah, for sure. This was not a planned episode, I would say. We just, Adam and I started bantering back and forth a little bit about Donald Trump announcing that he wants to do away with the income tax. And we started talking through, okay, well, if that happens, then this happens. And so thought it would make for a decent episode to sort of play some of this out. I don't think it kind of stands a slim chance of actually happening, but it's still fun to think about, and definitely something. If there's, real estate investors are always very aware of the tax code and changes in the tax code, and so certainly anytime you start talking about changes there, it perks my ears up. I'm like, okay, well, how's this going to impact us? So even if it's still mostly just kind of an entertainment exercise, it's still beneficial to think through and kind of help us understand, even if nothing changes, how some of these things are interconnected. How much are you looking at spending total across all of your entities, everything you're involved with?
I think we just got I just got the quote back for all of it. It's going to be like $20,000, I think, roughly. I mean, I don't have the full quote. I'm just looking at it. I know some returns are $1,500 and some are $2,500, but yeah, $20-ish thousand to tell the government how much they supposedly already know I owe them.
So that's the first question, right? How much value add is there actually there? I mean, this is a 100% compliance type thing. There's no, like, what of meaningful, like, that is moving humanity along, or is like adding things to people's lives? Like, what is being created from this process?
We're creating some jobs for CPAs. And we are creating some bureaucratic nonsense inside the government, some jobs there, I'm sure. But there's no economic output other than like just fringe, costs being associated. There's no goods and services being produced unless you're counting the service to produce this tax return that is not necessary to begin with.
So I guess the question there then is, but is the tax revenue being used for good?
No, it's not getting used for good because, I mean, most of the income that comes in is not what makes up most of the budget, right? Most of it is lent into existence, right? It's monetary. What's the word I'm looking for, Dustin? It's where the Fed creates debt. And what's the word for this?
So I think there's a couple of things. Like the Fed doesn't lend money into existence, right? Commercial banks lend money into existence. But in theory, the only income that the government receives is tax income, right? That's its only that's the primary source of revenue. Now, it borrows a lot.
Yeah, so that's what I'm saying. Monetizing debt.
Yeah. So
that's the word I was looking for. I couldn't get out of my mouth.
Well, that's a separate thing than just the borrowing, right? So you have like the actual lending is just the Treasury issuing treasuries to fund operations, right? So there's a significant portion of, like, obviously we talk about the deficit. That's what that is, right? Like the government spends more than it
brings in through
makes, because the government doesn't make anything, right? It's the government's only income is what it takes by force from citizens. Now, there's tariffs, there's some other things, and that's why this conversation is kind of interesting. And like, okay, you've got Trump has now hinted at, and I think it was a little bit more than hinting. He kind of flat out said we want to replace he's going to push Congress to replace the income tax with tariffs and effectively fund the government through tariffs. An interesting proposition. He talked about this a little bit on the campaign trail, and I think most people thought it was like, okay, that's a talking point. I don't know. I don't know if this actually stands a chance of happening. There's so many different windows and ideas and implications of this, right? And like I've heard one of our mutual friends, George Gammons, talked about this, and one of the reasons because we used to like the federal government used to be completely funded by tariffs, right? Like this is kind of a return to the way things used to be before
Tariffs
the
or
income tax.
bills, right? They used to put out bills, and if the citizens wanted to fund that individual activity, then they would buy that bill.
That was one way, but we also charged a lot of money to people to sell goods into the U.S. And that was kind of how the world worked. And we funded the government through that. Now, what I've heard George talk about, and I will admit that I'm not the most researched on this topic, is that it effectively created this kind of crony system where it incentivized certain activities, and basically the system ended up being highly manipulated. And there were a lot of people that were able to take advantage of it, and just the way that some of the money moved around and how the levers that could be pulled, things like that. So again, I'm definitely
Not
speaking
that
out.
the system right now is not being manipulated or used correctly.
I agree, but I also think it's like we can't. There's a lot of talk about this right now where it's like, oh, we're going to return to the old glory days, and the reality is that system had a lot of issues, such that the income tax seemed to be a more
Smoother
palatable
system.
option.
Yeah.
So it's worth studying, right? And it's not. I think there's a lot of maybe revisionist history, or just where people aren't fully aware of what that system actually looked like. But the thing that so those are like more philosophical and like actual implementation, like ways to that system. I'm like the side that I'm maybe more interested in is, okay, if the income tax were to go away, what actually happens then? Like, how does that? Well, what are the ripples that has across the tax spectrum? And of course, for us specifically, how does that impact real estate? Because a huge advantage of investing in real estate are the tax advantages. So does changes in the income tax, how does that impact real estate investment? That's the piece that I admittedly have not thought through a whole lot, and I'm very curious under this.
And just
It's like
doing away with the federal income tax isn't necessarily going to do away with the state income taxes. So we might still be filing states in the states that have state income tax. So that could be, you might still need some of those benefits in those states, but then now you're going to be leading to, well, I guess depreciation rolls across states, right? So like when I buy a property in Tennessee, I can take that depreciation and offset California income if I'm a real estate professional. So could still lead to investing in real estate for those tax benefits, but it's not going to be as huge.
obviously that's a very big part of real estate, and it's one of the reasons we like it, right? You can get all this tax advantaged cash flow, which if you're not going to be taxed on income anymore, then I suppose none of that matters at that point. Maybe there's you still have the capital gains side of it, right? So 1031s still, I would assume, would still be a thing under this system. But I definitely think the impact at least the federal level, to your point, of depreciation offsetting income kind of becomes not as relevant anymore. Again, at least at the federal level.
So, I mean, that's a really interesting point, because it's not the only reason we invest in real estate, right? It's not just for the tax benefits. Obviously, there's the appreciation, there's the actual cash flow. And if all cash flow is measured equally, and there's not, an income side that we're looking from a tax advantage perspective, I still think real estate can make a lot of sense on the cash flow side of things.
But it does, one of the things that I always like to talk about when people are like, well, I can get a lot of cash flow through my stock portfolio, I just invest in high dividend stocks. And it's like, well, sure, but you're probably going to end up paying, like you have very little, there's no built-in way
There's no shielding of the income.
to shield that income. There's ways that you can take losses and tax. People always like to throw out in that instance. They're like, oh, well, there's tax loss harvesting. And I'm like, well, yeah, but that just means you're now realizing a loss. Like all that is
it's an actual
you just
loss.
lost money.
You've lost money to save
Yeah.
this money. Yeah,
Like,
that doesn't work.
People always like to throw that out. And I'm like, that's not the win you think it is. But it does take away, like that's one of the direct comparisons, especially if, again, talking to people, if you're comparing dividend stocks or something in that realm, or even, bonds you're going to buy through a brokerage account, or even just in your own like cash account. There's no real way to shield that income. And then if there's, which I guess actually now that I'm talking this out, I guess it doesn't matter because it all just goes away. You're not trying to shield any income because it's all income, and the income tax is gone.
It all goes away. But that's the interesting point there is that now it's a little easier to compare apples to apples a cash flowing real estate investment versus a bond or dividend yielding portfolio, right? Because it's all just cash yield. There's not really a whole lot of
Yeah.
you're it's cash yield and appreciation, right? Those are the
Yep.
only two things you're looking at.
Yep.
The depreciation is going to have to get factored in. I guess your mortgage buy down would be one thing that you'd factor in on real estate, but
So
all
that's
those kind
actually
of
the point. That's
intangibles that are hard to calculate kind of disappear.
Yeah, and that's the next point that I was going to make is like, even though I think this takes away one of the distinctions or differentiations that's in favor of real estate over other types of investing, the thing that this really doesn't change at all is the fact that real estate's still driven by debt. And there's so much favorable debt that's available on real estate that's not available elsewhere, right? Like we've talked before about the idea of infinite returns, and really real estate's one of the only places where you can do that. And I don't think changes to the tax code necessarily would impact that. I don't know that there would be changes there that would impact the lending environment such that real estate all of a sudden becomes this thing where it's a non-favored asset class from a lending perspective. So I don't see that changing, and that arguably is the biggest advantage real estate has over just about anything else, is just how easy it is to get high quality debt.
Yeah, because I mean, you can't do that on a lot of other portfolio type assets. So I think overall we won't see a massive change in kind of the investing space. I just think that maybe the type of investments people look for could be a little simpler. I think one thing that just popped into my head is if somehow they remove the cap gain tax as well, then you might see a much higher velocity of transactions because people would be willing to trade without having to think about an upleg.
Completely agree, and that's I don't know that that's been talked about, but that does speak. At least it seems like once every 4 years, the question comes up about not removing cap gains, but doing away with 1031 exchanges, right? And the reality is, it's exactly what you said. If you remove that, that cuts down on the velocity of sales. And if we're in an environment where not a lot of real estate's trading hands right now anyway because of interest rates, like whether it's single family homes or large apartment buildings, that only further decreases the supply of things that's the supply of real estate that's actually trading, and further exacerbates pricing issues, right? Like that's not something that brings prices down, that keeps them elevated and pushes them higher artificially, right? Like not because there's any. It's a function of supply and demand. You're really restricting the supply in that case, and so if you still got a lot of investors chasing after the same number of properties, supply and demand dynamics, it's going to drive the price up.
It just would be very interesting though to look at that from a overall timing perspective, right? Because you see these cycles right now, right, where you're looking to try to maximize your deductions in December, right, so that you can finish out the year with as little income as possible, or I don't want to sell this house in December because then I only have 30 days to deal with the sale. And so all those timing issues, if you could get rid of those two government oversights of taxes, the free market moves much more efficiently, which I think is actually kind of where we started this, in that I'm spending $20,000 to file some freaking paperwork to the government just to let them know I don't owe them any money, when really I should just not owe them any money.
Yeah,
Okay.
for sure. So the other side of this, this is focused on real estate, but you and I also do oil and gas.
Mm-hmm.
And one of the top features of that investment space is its tax advantages, and specifically that it's a passive investment that can offset active income. However, if the income tax goes away, I guess that's a good thing, right? I think that's
Well, it
that's a
offsets
net good
anything,
thing,
right?
but
So maybe it becomes the thing that you're offsetting capital gains with.
possibly. And you mentioned earlier that still none of these changes impact the actual cash flow of the investment, and that doesn't change with oil and gas either, right? This is still, if the investment's producing wells, right? If the investment is in producing wells, then you're still going to have cash flow. But that it's not that you lose the tax deduction. It's just that the tax deduction is no longer a thing, which is it's interesting. Again, we're sitting here today recording this. It's early in the year. My thought on this is that there's a tiny slim chance that this could ever actually come to fruition. So I think most of this is just intellectual banter and sort of thinking through things, but it is interesting, right? I mean, when's the last time we've had someone at the highest level of government pushing to remove the income tax? So
Really,
it's definitely one of those
lesson
things to start
taxes in general
wargaming.
is not common
Yeah,
inside the government.
for sure. So all sorts of implications, kind of fun to think through. Obviously, if this continues to proceed and looks like it might stand a chance of becoming more real, there's going to be a lot more research, a lot more thought pieces, and it's one of those things where I would assume at this point it's just an idea. There's no concrete details, so in some ways, it's fun to think about, but it is hard to war game out specific scenarios for what might happen because there's just no detail. There's so many what ifs for how things could be handled, but it is interesting to just think at a high level how that would shift the investing landscape in some ways, and then in other ways things wouldn't really be impacted.
I think it's a good tie back to our motto, right? Freedom leads, real wealth follows. If there was less government oversight here and more freedom, then things would move faster, like we said, and you would have less taxes. You'd be more free to trade with other people. And
how much from a time perspective? I mean, you and I could be doing more deals. We would.
I mean, this isn't a large amount of time, but just this week we've spent we're going to have spent 2 hours maybe doing tax prep. Not a ton, but that's 2 hours that really didn't help anything. I have one person. We'd probably still have a bookkeeper, right? Because we want to keep good books. But I can tell you, she wouldn't be spending the 10 hours she's going to spend this week trying to compile stuff for the CPA.
Yeah, and in the time spent standing up new deals, we just launched the credit fund, and there's a lot of tax implications around that we had to work through, and it kind of delayed the process because we needed answers on certain things. And again, did that add value? Like, who was really benefiting from that other than our CPA that got to bill some consulting hours there?
Yeah, I think that's I think kind of tie this off unless there's other things you want. I mean, we're doing all of that planning and stuff such that, I haven't paid any income tax in the last 5 years. I guess that's not true. I paid $300 last year to the state of California, and that was because my CPA told me I should not burn $20,000 of depreciation to not pay that, which I'll take. That was probably good advice. So, if anyone's listening to this and they're interested in figuring out how to pay less in income tax and legally, as Robert Kiyosaki says, reach out to us. Send us an email, shoot us a text, you schedule a call with us. We can give you referrals to our CPAs or other tax professionals. We can talk to you about what types of investments tend to have higher tax benefits, what we've done in our personal portfolios. Yeah.
Yeah, no, I think that's a great way. This is one of these things that I think until you start, if you've never been exposed to this world, and there's an idea of people who think that you kind of have these multiple levels, right? Where it's like, oh, I make so much money, and now I've hit this milestone of I'm paying so much in tax, and that's not a thing. I've heard so many people repeat. It's like, well, you're having to pay a lot in tax on those RSUs or your stock options. Like, well, that's just the price of making money, and it's like, well, no, it's not. There's actually ways that the tax code itself is really a guidebook for how to not pay tax. If you do the things that are incentivized by the government, then you don't owe any taxes.
I mean, we have a friend who just had an 8-figure sale of a business, and they probably shielded at least half, if not more of that, from taxes.
Yep. All legally, right?
Yep.
Just simply by following the playbook that the government provides.
That they're hopefully burning.
Yes, that might be changing, but at least for 2024, that was the playbook that was in place.
Yeah.
But no, to Adam's point, reach out. I think if this idea of not earning more means you're going to have to pay more in tax, if us saying that is garbage is striking you as like, wait a second, what? Reach out. We'd love to have a conversation, share with you what we know. Again, we're not CPAs, we're not attorneys, but we've got a lot of experience in this space. We're happy to share, again, our knowledge, our experience, what we've implemented, then we can point you to the experts that we use and who have kind of helped and have guided us. All right. Well, we'll call it for this one. Thanks, everybody, for listening to the Wealth Independence Podcast. And just remember, where freedom leads, real wealth follows. We'll see y'all next time.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.